Pakistan will receive its 13th IMF bailout as they devalue their currency in order to prepare for the demands of the IMF. Turkey is trying to raise more funds after their currency's value dropped significantly in 2018, and they are concerned about money fleeing the country. Emerging markets are certainly unable to cope with the dangers being faced this year. Will this spread to the US? You came here for the truth, so let me unveil that for you. Today we are going to talk about Pakistan, Turkey, emerging markets, the US, and just about everything else. Now let me begin by taking a look at this article out of the actual IMF's own blog. So they have a full report, but their blog is just a snippet of information from that report. The report is linked here as well, but all I wanted to really note from this was global growth plateaus as economic risks materialize. And we are looking at this. I'll show you a chart in just a second, but what I really wanted to get into was the fact that we have several countries and we are expecting that emerging markets will always have persistent and very high growth to make up for other countries that are in Europe, for example, that tend to have slower growth, especially with population decline and so on. So these countries here have to make up for the other countries that are growing slower, but that's not the case anymore because we are seeing that slow growth persisting even in emerging markets. And that leads me in to my first article that I wanted to get into here. Cash strapped Pakistan to approach IMF for bailout package. And of course, they're going to get it. They had it 12 times before. They'll get the 13th. After initial hesitance and delays, Pakistan on Monday announced to approach the IMF for the bailout package to address the mounting balance of payment crisis faced by the cash strapped country. All right, so that goes on to more details about that, but let's get into it further out of this article in Bloomberg. Pakistan devalued its currency. That is very important to note. While its stocks and bonds rose after the government said it would seek the nation's 13th IMF bailout since the late 80s in a bid to stabilize the economy. Let's think about what they did right here. They devalued their own currency intentionally because the IMF is going to say to them, your currency is too strong and therefore you need to weaken it against the US dollar. And that's not good for the people of Pakistan, but what did it do? It actually improved the stock market. And a weakened currency does this simply because the value of those dollars, or in this case here, their currency, when we look at it, we have to understand if the currency is weakened, that nominally increases the price of the stock market. But in actual reality, is it worth any more? Well, of course not, because now the currency is worth less. Okay, that's what I wanted to really stress. The South Asian nation's key stock measures snapped 6 days of losses to advance 1.6%, the most in 3 weeks at the close, while its dollar-denominated bonds maturing in 2027 climbed the most since July 26 before pairing the gains. The rupee, a managed float, fell 7.5% to 133 against the US dollar. Now that's a big drop there, 7.5% in their currency's value in a single day. So I'm going to keep tracking this along with other currencies as well. Foreign currency reserves have plunged 40% in 2018 to the lowest in almost 4 years, while the nation is running twin current account and budget deficits of more than 5% of GDP. We've got more issues going on here. The currency's latest drop comes after the IMF repeatedly stated that the rupee was overvalued. The currency move is definitely a devaluation. This is what they're doing. Imagine the country purposely ruining the currency in order to make it applicable to get that next bailout. I mean, this is terrible. The way that the IMF does business, I understand that they probably have models and they probably have these criteria that need to be fulfilled, but it's really bad. It's truly very bad what they're going to do here. Yet again, severe drop. Pakistan's foreign reserves dropped to the lowest in 4 years, and you could see this chart right here out of Bloomberg and where this has gone. So it is quite interesting to see a country like this and what it has done. I have so many people constantly asking me, do a video on Pakistan. So this is a few of the charts and articles along with that. So to all my friends who are interested in Pakistan, there you go. Now we're getting into Turkey very briefly. I wanted to cover this. I thought it was really interesting. Not that long ago, I did a video about different places where you can go to get citizenship for different prices. Many of them are very cheap. And so Turkey was one of them. That was $1 million actually, but now that has changed. All right, so they've made some changes with their rules and regulations in order to become a citizen of Turkey. It's now going to cost as little as $250,000. Individuals owning property worth $250,000 or more are now also entitled to become Turkish citizens compared with the previous value necessary of $1 million. So they're trying to keep money flowing in. Foreigners, let them buy up because the foreigners have money. Those in the country are obviously suffering with a devalued currency. So they say, you know what, we'll give people the incentive. We'll give them a citizenship, and then they'll be able to purchase a place here. They're going to bring investment in. That means business. That means tourism. So let's do it. There's also some other things here basically suggesting that foreigners now need to have $500,000 deposited in Turkish banks, down from the previously required $3 million. Fixed capital investment was cut from $2 million to $500,000. All right, so we've got a big attempt here to get the money flowing into the country. Okay, so that's what I thought was very interesting, not just for Turkey, but we'll probably see this with other countries as well. Latest World Economic Outlook projections. This is from the IMF directly, and you could see going in here, looking at apparently a growth of 2.5% in 2019 for the United States. We're going to see if the fake GDP numbers will come up to 2.5%. That assumes that there isn't going to be a recession. We'll see. Canada, in this case, they're predicting 2%. So I think it'll be even less than that, but we'll have to factor that all in at the time. And you look at a lot of these emerging market and developing economies, apparently 4.7%. Now, typically, you would see emerging markets growing faster than a lot of places like the US and Canada. That would be considered normal. But 4.7 really isn't that high. So I'm interested to see what actually happens. They're claiming China will have 6.2%. So we'll see. I'll keep my eyes on it, and of course, I will bring that information to you. On the rise, many central banks represented in the G20 have raised policy interest rates this year, usually more than once. So the font is probably pretty small here, but I mean, just look at the interest rates in areas like Argentina, like Turkey, that are outlined here on the side, but other places, even Canada is on this, and how much they've increased this year. I'd hope that they do increase interest rates much more considerable levels, because it's still too low in a lot of these countries. Obviously, Argentina and Turkey have done a lot of interest rate increases, particularly Argentina, but I'd like to see this be widespread. I'd like to see more money being kept in the countries and not have all this wild capital flight occurring. Then the government tries to put capital controls. Then there's a big black market that appears. This is not good. It's not good for the currency itself. It's not good for the country. It's not good for the people. You have chaos that brews as a result. Part of this, by the way, is pretty impressive. The IMF suggested that inflation is going to hit, if I remember correctly, I mean, it's just the number is really beyond me, but it's 10 million% inflation in Venezuela. That's what they're predicting. I'm assuming that's for 2019, but I didn't pull it up in here, and now I forgot the number, but 10 million%, not bad at all. This was a little bit of, I guess, humor. Greece is about to launch a campaign to claim 280 billion euro in reparations from Germany. So they're saying, you owe us money, give it to us now. And they're desperate for that money, obviously, and they want it from Germany. We'll see if that actually does happen. I'm not sure what's going to happen with it. We'll see if it actually goes through. So far, I don't believe that has actually happened. And this right here, to finish it off, was something interesting. Now, the founder of Home Depot, he, co-founder of Home Depot actually, he said something talking about socialism versus capitalism, and he said that what we have right now is going more and more towards socialism. A lot of people are calling for that, but he said this: if you want socialism, I'll put you on my plane and I'll fly you down to Venezuela and let's see how good socialism is doing down there. And there's a lot of confusion, which this article points out, about socialistic environments. And you can see a country like Canada, which has a socialist healthcare system. You have a lot of countries that are in Northern Europe, for example, that are similar in that regard. It's a capitalist environment, but it has a welfare state. I think that's really the difference, and this article points that out, and I do think that's correct. It's not socialism that you want, because socialism basically means the government has control of everything. They decide. You don't have control over your house and your money and what prices are and what you can charge for something as a business owner. That's socialism. I can understand if you want a socialist healthcare or something like this. That, I think we really, really need to make a better definition as to what we're going for. I don't agree with that, but anyway, long story. But this is what people need to, if you're going to call for a particular system, then we should really define what it means, because just saying one word of the other, you start to get these connotations and you start to get confused, because there are certain individuals here that are attached to certain ideologies, and then you get a bad vibe from that, and you get a lot of history attached to that. And I think that this really needs to be understood at a deeper level. That's it. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel, so I do appreciate that very much. And if you want the financial education you were not taught in school, well then, these two books have it all. You can actually flip through these books. All you need to do is go over to Amazon. There's a look inside feature. It's going to give you the ability to flip through the pages if you're interested. Last but not least, if you want to check out my audiobook instead, themoneygps.com.